Reverse mortgage, what you need to know. So today I'm super excited to have Evan Klaus with me, and Evan is a leader in the reverse mortgage space, and he's with Reverse Mortgage Funding. Evan, welcome.
Thank you for having me. Really excited to be here. So yeah, I've been with reverse mortgage funding for almost 4 years now. And more recently, I just left the origination side and joined the education side. So we're trying to bring more awareness to the purchase product under the reverse mortgage umbrella. So the reverse mortgage for purchase, which is kind of what brought me to you.
I love it. Yes. Yeah. So, I think that this is so timely because for a lot of reasons, right? I mean, just home values increasing. There's so many different ways that a reverse mortgage can be beneficial. I've originated them for years, so I understand them. And I will say that I think there's so many myths. I think there's so many just misunderstandings about them. And I also, always tell people, look, it's a loan program, but it doesn't mean it's necessarily the right fit. I think that's where really talking to an experienced loan officer, loan originator who really understands the program, that can give people true, just here's what it looks like, here's their story, here's their goals, hey, this might be a great option, and here's the things that you need to know about it. It's like any loan program, but I think that there's just so much like bad rap out there. I'm really excited to have you here today to just kind of help us walk through and educate our community and our country on really what we need to know about reverse mortgages.
Yeah, absolutely. So like you said, there are a lot of, there's bad rep to the reverse mortgage name. So even the company name, Reverse Mortgage Funding, sometimes it's hard to get in the door with people like, realtors and stuff like that, just because it does have that bad reputation there. But so a lot of the misconceptions that, I've heard in the past, I just wanted to quickly get those out of the way. So we do not take the house. That's the number one thing. So if somebody is doing a reverse mortgage, they are still on title, just like if they were to do a forward mortgage. It is still their home, as long as they keep up with their property taxes and homeowners insurance payments, they're good to go, just like with any other mortgage. So that's the number one.
And they have to occupy the property, right? So at some point, once they exit the property, they have to go into long-term care or things like that. Walk us through that. In fact, I just answered this question last week at the gym. I was talking to somebody and they're like, oh yeah, that whole reverse mortgage thing. And it's really a good fit for this guy's mom. And he's like, oh no, they're going to take her house. I'm like, no.
Yeah.
All right. So walk us through that. Like, let's go deep on it.
Yeah, absolutely. So it does need to be owner occupied. Doesn't mean they have to be there 100% of the year. But as long as it is owner occupied for a majority of the year, they're good to go. Other than that, they just need to make sure that they stay on top of their property taxes and homeowners insurance, and they maintain the home. So it can't, fall apart. So
right. And homeowner association, right? We don't want any.
If there's an HOA there, then that needs to be kept up with. But really, it frees up a lot of cash.
Totally. Yeah, we're going to get into that in a second. But let's walk through this whole, if somebody does have to vacate the home, meaning that they can no longer occupy it as their primary residence. Walk through what happens then.
So at that point, you have to look at how much they owe on the property. So let's say they owe $200,000 on a $400,000 home. They are only responsible for paying off that $200,000. So they can list that home for sale and use those proceeds to buy their next option, or if it's time for them to move into, a different sort of living situation, that money would be free and clear for them to use after selling that departure home. So just like any other mortgage.
Yep. So let's walk through that though. Let's say that let's just say it's my parent and they have to move into a long-term care facility. So how would the person that's helping to speak for the parent, or in your case, the borrower, the person that's actually on the home loan, how do we as the family help that conversation? Do we contact the reverse mortgage lender? Do we let them know of the situation? Do they give the family a period of time to be able to get their ducks in a row and then list that house for sale? Let's walk through that particular scenario first.
Yeah, so in that instance where it's not due to that person passing away, there is no like time period where they have to move out. So it's really up to the borrower at that point and their loved ones to figure out what that timeline looks like for them moving on to their next step. So for them, they would want to consult with a realtor at that point and kind of figure out like what that house could sell for, And then also they want to request that payoff statement just to see how much they owe on the loan at that point, to see how much they're going to walk away with once they pay off that loan. So
right. So really it's no different than any other mortgage in that scenario.
Correct. Very, very similar there.
So let's say that they owe more on the house than it's worth, which is not necessarily likely at this point with all the appreciation our country's seen, but let's just throw it out there. Let's say that they now owe more on the house than they could sell it for. Now what?
So the reverse mortgage has a non-recourse feature, which means that the FHA, so that's what they're paying the MIP for every month. So the FHA.
So let's slow it down. When you say MIP, that stands for mortgage insurance premium.
Absolutely.
And when you say FHA, what does that stand for?
Federal Housing Association. So
okay.
It's a government-backed loan.
That means it's a government-backed loan.
Yes, it's a government-backed. Okay. So let's say in that instance, that person owes $500,000 on the loan. The house is only worth $4. That's what the MI insurance is there for, to protect that. So it doesn't fall on that borrower at that point or their heirs. It falls on the MI insurance. So.
Okay, so when they're alive, they have to go to long-term care. They can't maintain the house, so they need to get rid of the house essentially. If the house is in a negative equity position, then the family would just contact the reverse mortgage lender, explain the situation, and at some point, essentially, what's going to happen is FHA is going to take that home back.
Correct.
Right?
Yep.
Because there's no equity in the home.
Yep.
Okay.
At no point does the borrower get like a bill saying, "Oh, you now owe $100,000" because it's upside down. At no point does it happen. So.
Okay. It could impact their credit. I'm assuming though, when you bring the house back or you have to essentially foreclose, I mean, if they're still alive, is it impacting their credit report?
It does not. They're not late on payments or anything like that. That's the loan that they got into. It just outgrew the value. So that's not on their credit.
Okay. And so then let's work through, let's say that the parent passes away and now the heirs need to do something with the house. Let's say that there's the same situation. So there's no equity in the house. Now what? I believe that FHA has a provision that would actually allow the family to purchase the house for 95% of the current market value. Can you walk us through that?
Yeah, absolutely. So you nailed it right there. So 95% of the current market value of the home. And also if they end up selling the home and saying, I don't want anything to do with this house, nobody's getting stuck with that bill. So that's the non-recourse feature.
Right.
Yep,
okay.
Absolutely.
Okay. So in that scenario, let's just say that the house is worth $100,000. And let's say that the family's just not ready to move on yet from that house and they can qualify to purchase the house. They would essentially do that, right? They would purchase the house from the reverse mortgage lender, or in this case, FHA, for 95%. So $95,000 in our scenario would be the purchase price.
Correct. Absolutely.
Okay.
You can take over that loan at that point.
Now, is there anything that the borrower has to do with their family or their estate or their heirs to kind of facilitate or allow for that to happen?
No.
Is there the executor of the will, or do they have to name a person that's their contact person? I mean, how does that work? How would you guys even know if it's truly a family member? That's the intent. There's got to be some checks.
Yeah, there's going to be checks and balances involved in those kind of scenarios that really is dictated by the will and how they have all of that set up.
Okay.
But it really depends on how they have their current situation set up with their heirs.
So it would be important for them to have a will to specify their intent with the home and kind of name a person that might be the representative for the family to communicate with the reverse mortgage lender.
Absolutely. Yep.
Okay.
Very important.
Right.
All that sorted.
Yeah. All right. So let's kind of walk through this reverse for purchase, because I think a lot of people don't realize you can actually use a reverse mortgage when purchasing a home. So walk us through it.
Yeah, absolutely. And that's kind of been my bread and butter, like what I'm trying to spread awareness for and what brought me to you. So the reverse mortgage for purchase is really an underutilized tool. So anybody over the age of 55 can benefit from this, and they're able to purchase a new home, or at least a new home to them. They put down a down payment that's based upon their age. So let's say around 50%, and the rest is covered by a reverse mortgage loan, and they have no monthly mortgage payments. So it really frees them up as far as their cash flow goes, and they can secure a new property that might be a better fit for the rest of their retirement. So
So walk us through the age requirement, because you said 55, but I've always known it to be 62. Walk us through that.
So at RMF, we have a proprietary product that allows you to borrow if you're 55 and up. So the FHA, 62 and up, proprietary, 55 and up.
And when you say proprietary, you just mean more of a conventional reverse mortgage. It's not backed by the federal government.
Correct. So that would be through us. So it's called Equity Elite. It's got its own fun name and everything.
Okay. All right. So it might work different on that program, though, when it comes to being able to purchase the house at 95% of the current market value after the era passes, or are you guys mimicking the FHA program with regard to the guidelines on that?
Yep, everything is mimicked there. So same non-recourse features as the FHA program there. Rather than the FHA being responsible, it'd be us, the lender. So RMF, we service our own loans as well. So it would fall on us.
Okay, so let's walk through some numbers, because I get it. You can do roughly, and again, it's not 50% down. You know, I don't want anybody to walk away and go, oh, if I put 50% down, it's all based on your age. So here's the deal. It's all about like insurance, right? It's all based on lifespan and actuarial numbers and things like that. So the older you are, the less you have to put down. The younger you are in the spectrum, the more you would have to put down. That's a fair assessment, right?
Absolutely. So, I mean, starting at 55, you're going to have to put a little bit more down. So it might be over that 50% range. And as you get older, you get to put down less. And the reverse mortgage covers more of it when you're purchasing a new home. So
yes,
it is a sliding scale there. So it is important to, if you are thinking about it, you know, give us a ring or give your reverse mortgage specialist a ring, and they can go through all those different options.
Yeah, I think one of the ways that I see that this really can be leveraged, especially with rising home prices, is, and we see this a lot here in Arizona, but you know, people maybe are selling their house that's free and clear in the Midwest. They think they're going to move to Arizona with all this sunshine and just, you know, lived out their years in this beautiful environment that we have. And then they get here and they go, holy smokes, properties are much more expensive than they were, let's say, in the Midwest, of where they're moving from. So one way that I see that this works well is, let's say that maybe they sold their house back there for $300,000 and they have $300,000 net cash in hand that they were going to put down on this house. Well, $300,000 here is going to buy this type of dwelling. But if their tastes or in the community that they want to be in might be more of a $500,000 or $600,000 house, where I see the reverse mortgage really helping people is that it helps them leverage that price point and still not have a house payment. So it could be something like, price point now goes from $300,000 that you're going to pay cash for to $600,000. You put the $300,000 down, right? And now you're leveraging the ability to live in that house. That's the $600,000 price point. Yes.
Yep, absolutely. So you nailed it. Yeah, you're crushing it. So
it's not my first rodeo.
Payments required there, and any payments that they do make. So this is actually a fun little part here. So they are not required to make any payments. So let's say they do say, you know what, for the next 5 years, I'm still working. I'm not fully retired yet. I can afford to make $1,000 a month in payments, or whatever that looks like for them. When they make those payments, it pays down the loan balance and goes into a line of credit, as long as it's an adjustable rate that they elected for that. But that's a little nitty gritty, but there's a lot of options available for folks who are looking to do the reverse purchase financing.
Yeah, I think there really are. I also think that, you know, on that note, like if somebody doesn't want that loan balance to increase, because that's essentially what's happening. So let's use our scenario, right? So $600,000 purchase price, they put $300,000 down. Let's say that loan amount for this purpose is starting at $320,000. Let's just say that, right? So every month you're accruing interest and mortgage insurance. If it's on the FHA program, every month that mortgage insurance is accruing, and it's going to add to the principal balance of the loan, right? So now it's going to grow and it's going to increase over time. So it's a reverse mortgage in the sense that on a traditional home loan, what we would call a forward home loan, when you pay your payment and you're paying that principal and interest, the principal portion of your payment is using to pay down your principal balance. In a reverse mortgage, the interest in the mortgage insurance is increasing your loan balance. And I think that that's really kind of scary for people. So let's walk through that. Give us the details on what we need to know.
So when you do a mortgage, any mortgage, you're going to be, you know, there's going to be an interest rate there. So let's say it's right now 6%, 5%, whatever that looks like. So your interest rate would go up by that. If you do elect to make payments, it would cancel that out. So let's say you're making that $1,000 a month. So dollar for dollar, that would go in and offset that it's a negative amortization loan.
Right.
So if they can afford to make payments, I will say most people that do this reverse purchase do not. They like having the cash flow elsewhere. But it is an option to make those payments, and it does go into a line of credit if it is an adjustable rate loan. So.
So we could use a reverse mortgage for purchase transactions, and then you could also do a reverse mortgage for refinances, right? So let's say that somebody has paid off their home, and let's say that, and we see this a lot, our country, especially, people that are 50 and older, they've kind of, that mindset was to buy your house and pay it off.
That's the dream.
And that works if you have other assets that can help you live the rest of your life. And so
people are living longer. So, I mean, a lot of folks are tapping into that now. So we're seeing a lot of people that might have bought their home for $80,000 back in 1970, and they're kind of sitting on like a winning lottery ticket when it comes to equity. Now it might be worth like $1 million out towards you in Arizona. So they're tapping into that and using that for their retirement. And for the heck for purchase side, let's say they're in that scenario and that house just doesn't fit them anymore. Maybe it's a 3,000, 2,000 square foot home, and they need a condo with an HOA that, mows their lawn or whatever. So they can tap into that equity from selling it and purchase something that's a little bit better for the rest of their retirement. So
it's still not have a house payment, right?
Correct.
Yeah. The deal. Yeah.
Free and clear there.
Yeah. So I think that when we think about all of this conversation, and I'm a fast talker, I get it. So I want to kind of just slow it down. What is the number one myth? You said it earlier, but let's kind of address that and let's kind of dive into the other stuff. But the number one thing I hear, and I know you hear, is
they're going to take my home. Yeah.
They're going to take my home.
Okay. They're going to take my home. So we've already touched that one. That is not the case.
We're not going there.
Right? Loan. It's the same as having a forward mortgage on your loan. It's all the same there. So
yeah, and you don't sign your house over on a reverse mortgage either. You're on the deed of trust.
It's all the same. So unfortunately, that bad reputation's been carrying on for quite some time, which is why if this product had a different name, honestly, if it wasn't reverse mortgage for purchase, I feel like everyone over at the age of 55 would look at this as an option. It would be, okay, we can do FHA, conventional, or here's this other option here, specifically available for people over the age of 55. So,
why do you think that the lending community doesn't present this?
It's not a very transactional sale, to be completely honest, since it does have that, I guess, bad reputation, and it's not going to be a quick decision. You want to involve children, you want to involve other people. It is more of an educational thing where that's my entire job here, where I'll talk to somebody and they have to think about it for months, and it's not going to be a quick sale. So it's not transactional. So I think that might be why people aren't doing it. And also just the education isn't there. Outside of you, a lot of the folks that I talk to have never even heard of this option before, which I think is a big disservice to the active adult home buyers, which is a huge portion of the market. I don't know if you've seen that out there, but it's a pretty substantial part.
And I think you're right too, that from a knowledge standpoint, this is unlike any other forward mortgage that a loan officer might know. Like this is like whatever you think you know about lending as a loan officer, this reverse mortgage product and program is so different. It takes time to kind of rewire your brain because it does just work differently. And also just on the family front, I think that it is important that when we're talking to a potential person that this could be a good program for, that we better understand what their goals are, what their life goals are, what their goals are after they pass, meaning, is it that their lifelong dream is to pass that equity in that home onto their family? Then if it is, we need to know that. So then we can, help them with that conversation. Then this may not be a good program for them because depending on the equity position, that's going to be eaten up and there may not be any equity, So I think just really being able to lay it out. Now, I will tell you the families I meet with, depending on the scenario of the parent, a lot of these families are like, look, we want our mom and dad to live life to the fullest. And right now they're on such a limited income. They're sitting here on this huge, nest egg of equity, but they're struggling to eat, to travel, to live. And so a lot of those families just want to learn more about it themselves so that they can put, their loved ones in a different position, with regard to just having accessibility to maybe being able to not have to pay a house payment or pay your, living expenses on just Social Security income. It now reverses the whole scenario. And now you have access to that money and that equity, so you can leverage it.
Yeah, absolutely. I think the more people involved in the decision to at least look at a reverse mortgage, the better. There's loved ones that, maybe that borrower is really concerned about their legacy that they're going to leave behind, as far as like the house that they raised their kids in. They want to make sure that they can take that over. So those are all conversations that I like to really dig into and figure out, like, where are they at? What are their goals? Is this really a good fit? Which is why I think it's so important to partner with a forward lender, because we only do reverses here. So, having partners outside of our reverse mortgage world really opens up the conversation to make sure that they're getting the best loan for them for their future.
And likewise, I think it's okay for a forward mortgage lender who maybe doesn't do reverse mortgages or just doesn't really understand them. I think partnering with a reverse mortgage company like yours is helpful, because now we just have another program that we can now all have that same kind of conversation, goals and dreams. What's the ultimate goal? And if we're vetting that and we find out, what, this might be a really good scenario for this borrower, then there's a contact to go to that you all know much, much more about reverse mortgages and can kind of get into the nitty gritty.
Yeah, absolutely. And I mean, the market out there, even though it's kind of slowed down recently, just in the past year, purchases of folks over the age of 55 was about 30% of the market. So this is a very large market. Just around 2.1 million of the homes that were sold last year were to people over the age of 55, and just around 73% of them financed their home with an average down payment of around 23%. So I guess my biggest question is, in your market, have you seen folks in that age range purchasing homes?
Well, I would say not purchasing with a reverse mortgage, because our market has been so competitive, as have been many markets across the country. And I mean, a traditional forward loan that could close in 2 weeks couldn't compete with cash. It was very difficult. Now that's changing. So real estate, goes in cycles, and markets go in cycles. And so we're starting to see that now buyers have a better opportunity to be able to compete, and there's more inventory available. So this is a great time. So in this type of market, using a reverse mortgage to be able to purchase a home could be viable. Last year, I would say it wasn't really viable unless you had a seller that was just willing to, wait the time. And on that note, I mean, what is the process once a person's been pre-approved for a reverse mortgage? How long does it take to actually close escrow on a purchase for reverse?
So just like any purchase transactions, can take around 30 to 45 days. A lot of that process is kind of out of our hands, as I'm sure with the appraisers and stuff like that. So there are some things that can't be controlled in the process, like appraiser availability. The one big thing that is something that needs to happen is the counseling. So anybody who wants to do a reverse mortgage or a reverse mortgage for purchase, there's a third-party HUD-approved counselor that they need to go through that just educates them on the decision that they are about to make. So that's
I love that. I mean, I think that is so important. So let's walk through that. So this HUD counselor is a third party. So it's not the lender. It's not the loan officer. It's an approved agency that's very well versed in reverse mortgages. And then they consult the person that is inquiring about a reverse mortgage, and they determine whether that person, kind of understands it. And so there's kind of like a little quiz that goes along with it. It's about 45 minutes. It can be done over the phone. It's, I don't know, call it less than $200, depending on where you are in the country. And then once that person goes through that counseling session, then they're issued a certificate by the HUD counselor, which is what the reverse mortgage lender is going to need to kind of continue through the process.
Yep. Before we can order services, that needs to be done. So that's just, I would say that's probably the most unique part of our loan process that differs from other loan programs that are available. But I think it's a really good safeguard, not just for the lender, but also for those borrowers, to make sure that they really understand what they're going through. So it's not just a lender saying, hey, this is what you need to do. These are all the features and benefits. they're hearing it from someone else. So.
And also just so they're not feeling pressured. I love FHA's reverse mortgage HECM program because, it is there. It has safeguards built into it to protect people, to, really make sure that they understand what's taking place and what's going on. And I think the education part of the reverse mortgage is the key, to be able to just even the documents, if you're borrowing 300,000, what's happening, and being able to walk them through that amortization schedule and, all the bells and whistles that take place on it.
So, I mean, I think that kind of circles back to like why it hasn't been more popular, because not only do the borrowers need to understand it, the people doing these loans need to be experts and really be well versed in the whole process, the benefits, and how to really do this properly to make sure that you're putting that person in the best loan for them. So.
Absolutely, without a doubt. So, well, Evan, anything else we need to know?
I think it kind of helps if I can share a story of a customer. I'm not going to say their name, but this is kind of what woke me up to this product. So I came from a reverse mortgage company where we're doing a lot of refinances. So these are people that were in a reverse mortgage and they just wanted to tap into more of their equity so that they could, continue to live comfortably. So we were doing a bunch of these, and unfortunately, not everybody's qualified to do a refinance. So I would always ask, like, what are you looking for the money for? Like, what could this help you out with? And a lot of times, when I had to turn people down, it would hurt. You get to know that person. And I had one borrower in Maryland, local to me, and she told me her story. Her husband had passed away. She was still in the house that was over 2,000 square feet, where they raised their kids, and she just wanted to get out. So I asked her like, hey, do you want to stay in this home? Like, would an extra $20,000 really change your situation? Or do you think it'd be better to move elsewhere? And at that point, she brought her daughter into the situation. We talked to her and figured out that her daughter even thought that she should be downsizing and moving into something that's, a little bit less hassle for her. So we were able to do the HECM for purchase for her and got her a condo in Annapolis, which is close. But yeah, she loved it. And that's really what woke this up for me all those years ago now. So
yeah.
that's where this
I
came
think
from.
in that situation, depending on if she owed any money on her house or not, I mean, she may still have now a nest egg of cash that she didn't put down on the reverse mortgage. So now that's there to be able to live on. And I think that's the piece of the puzzle, that everybody has their own story. Everybody has their own, what I call footprint, right? Their own specific kind of what's going on in their life, their financial life, their goals, their dreams, their hopes, their health, all that stuff. And all of that really has to be discovered in these conversations. I had a client a couple of years ago who had a 2-story house, and she'd been laid off from her job, and all she got was Social Security per month. And I think it was about $1,200. So it was a 2-story house with a pool. She had 3 dogs, and she was just struggling to, and I think at that point, maybe she owed about $60,000 on her house. So there was just no money, but she had a significant amount of equity. And we were able to do a reverse mortgage refinance for her, alleviate that payment, and allow her, she wanted to stay in her house and allow her to have the equity line portion of that reverse refinance. And it changed her life. And she was just so grateful. And, that just brings joy to me and to certainly others in the space that understand the product. Now, again, I want to go on the record to say it's not for everybody, right? Just like a forward mortgage isn't for everybody. There's all these nuances. What is important is to really determine on a reverse mortgage what you need to know. And that can be done by having really great conversations.
Absolutely. So I'm always available for any of those conversations. So I have taken myself out of the origination side. I haven't done a loan in almost 2 years. So I focus solely on education. I am client facing, so I still have my licenses, so I can talk about loan options. But most of my time is spent talking to people like you, different realtors. So it's been really exciting. And I think over the next few years, this product will become more popular and hopefully help a lot more people. So
I think so too. Now, do you guys lend in all states, or is it just in?
So all 50 states. And then for our proprietary product where you can lend up to $4 million, that's in, I think, 25 or 26 states. So that's on a state by state basis for the proprietary reverse mortgage product that we have.
Great. Well, Evan, we'll include your information in case people do want to get in touch with you to learn more. And thank you so much today for coming and enlightening us and sharing your wisdom with regards to reverse mortgages and what people need to know.
Absolutely. Thank you so much for having me.
You bet. Take care.